and offers popping up on your screen. We have a chat panel on the left where you can chat with the audience, as well as a Q&A panel on the right where you can ask questions that will be answered by our expert moderator team, as well as John at the end of the presentation. For optimal viewing, you can hover over the presentation and click to go full screen at the top right of the video. And now, to start us off this evening, we have the one, the only, Mr. John Carter.
Hey everybody, welcome to tonight's webinar. Super excited to introduce you to Jonathan McKeever, also known as Trendy John. It's always fun kind of finding new traders, and he's not a new trader, but you know what I mean. He's new to my universe, and like their background and what they have gone through to develop the system that they have today. And what's great is John's background. He's been in the Air Force, and in something like that, you kind of have this, not only this discipline that comes with that, but precision. If you're in the Air Force, you don't want to like ballpark things, right? Well, maybe this will work and maybe it won't. It's got to be very precise. And I find that also comes in with that attitude, it brings it into trading. And so for something like this where, a lot of stuff in trading it can be subjective. It's like, well, gosh, there's a squeeze here. There's like a 75% probability that it's going to fire long. We don't know for sure. If I knew it was going to fire long, I'd put on a huge trade here. But because I'm not absolutely positive, I'm going to put on this kind of a trade. And so there is, which, and that's kind of like, that's what I kind of live for, those kind of probabilities where it's like, hey, that's fine. You know what? If it doesn't work, that's fine. And if it does work, that's awesome. But there are times when a little bit more, in fact, a lot more precision is appreciated. And I found that, everybody eventually kind of gravitates towards a system that best fits their personality and best fits not only kind of the way that they either view the world and look at the markets, but also what they want. Like, what's their lifestyle? Do they want to be chained to a desk all day? Do they want to, guess where things may or may not turn around? And what's great about Trendy John's approach is that it's just very specific. Like, there's no if, ands, ors, or buts about where an entry is or where an exit is. And that's the kind of stuff that I find what's nice is that you find a system where it's like, okay, is there something where it's just obvious where I need to get in and obvious where I need to get out. And a lot of times, especially a lot of trading systems are really, really good about showing you kind of where to get in, and then getting out becomes really subjective. And what I like about this is that we're going to see things where it's just like, hey, not only is this kind of the area where you want to get in, but it's very, very clear that this is the area you want to get out. You don't want to hang on for more or anything like that. And a lot of this is just, it's based, institutions and liquidity and where they're getting in and out, and just being able to utilize this on whatever it is that you want to trade. So anyway, this is super exciting. You guys are going to love this. It's always good to kind of, on something like this, you kind of get exposed to some new ideas, but then also just kind of, is it something where this is possibly kind of finding your home? Is this the kind of style and strategies that you've been looking for? And that's why, we do things like this. So anyway, enjoy, and looking forward to seeing this. And Jonathan, I'm just going to turn this over to you. I'll be quiet now.
All right. Thank you so much, John, for that introduction. How's everybody doing tonight? Everybody pumped up and ready to learn a little bit about my methodology and a little bit about supply and demand secrets? Tonight, I'm going to be sharing all of that with you. I'm also going to tell you how I've achieved my 70% win rate. So let's go ahead and get to it. So let me introduce myself. My name is Jonathan McKeever, aka Trendy John. And as you guys all know, you've heard the story before. My mom didn't name me Trendy John. It's actually Jonathan. However, I'll get into details later what that Trendy stands for. I'm the creator of the Tr3ndy methodology. What does that mean to you guys? Basically, I went to school for supply and demand. I actually went to an accredited school where I spent a lot of money to learn about supply and demand. But what I did with that is I found a simpler approach. I found a way to make supply and demand trading that much easier. And I'm here to teach you that tonight. 10 years of trading experience, 10 plus years of trading experience. And let me be very transparent with you folks. It has not been easy. It's actually been pretty difficult until I found supply and demand trading, which really changed my life. Out of those 10 years, 7 of which I own my own business, Tr3ndy Trading, And I know that many of you probably came from there, and I appreciate you coming out tonight and supporting me. But I've traded and taught thousands of traders across the world. And the one thing that I really learned is I am here for you. I'm here to watch you succeed. That's actually what really gets me pumped up. Now, I also was in the Air Force, just like John said. I spent 21 years in the Air Force, and we live by three special things there: integrity, excellence in all we do, and service before self. And you'll see that I put our members first before myself. Let's go ahead and move on here. So, supply and demand. I'm going to teach you how to think and execute like the big players, the institutions, the market makers, the hedge funds. Supply and demand trading is the edge you're looking for in any market condition. And when I say any, I really mean that. All right, guys. So I'm right here with you. How many of you are struggling with these things here? Consistency, getting stopped out just to watch price move in the direction that you thought it was going to. I can't tell you how frustrating that could be. Planning your trades, are you waking up or maybe even coming into the afternoon and thinking to yourself, like, how do I plan this trade? Execution. You can't execute trades if you don't have the consistency and you don't have the plan. Risk management, revenge trading, allocation. All of these things are so important. And then finally, transparency and time management. We're going to get into transparency because that's one of my number one rules. And I can't wait to share with you how I am transparent. Time management, I'm going to show you how to win back some of your time and how you can live your dream lifestyle. So what are you going to learn tonight? Well, you're going to learn what the Tr3ndy methodology and process looks like, what Tr3ndy stands for, how to think like an institution. Are you guys ready to think like an institution? Are you tired of just getting in a trade and then finding out like, man, I can't believe I just got FOMO'd into a trade? Most likely you got FOMO'd right into a supply zone. And I'm going to show you how the next trade, you'll be on the other side of that and you'll be selling your shares or your calls or your puts to the old you. What supply and demand looks like on my chart and why supply and demand trades give you the time to live your dream lifestyle. So why is this for you? Well, first of all, there are high probabilities in the market where institutions are buying and selling. It gives you the opportunity to plan your trades. It gives you the idea of a proven methodology. There's consistency, transparency. Basically, folks, I don't know what type of trading you're doing. It doesn't matter if you're doing equity, futures, options, Forex, or crypto. If you're using a chart to take your trades, this is the edge you're looking for. Folks, honestly, my goal is to teach you. You're willing. I want to show you my proprietary methodology to help you earn calm, consistent returns. So what does Tr3ndy stand for? Tr3ndy. T stands for trend. Why? Because that's my ultimate goal, to make sure that you understand what the trend is in the market. Range. Why is range so important? Range is so important because there's a lot behind it. How many of you out there have already learned from me how to stay in a trade by using your Fibonacci's? And for anybody that doesn't know what that means, I can't wait to show you. It's absolutely amazing. It's amazing what you can do within a range. 3 to 1. This is so important. How many people have you come across that have said, hey, I want you to take a trade for $1 and I want you to get it 3 in return? Well, my system, my methodology, my indicators, everything that I'm going to show you, let you know this before you take the trade. It helps you become more consistent, but also you can understand that there's a plan in place before you take that trade. So what will this allow me to do? It allows me to do set and forget trades. Basically, I put on a trade. I know where my stop is. I know where my entry is. And therefore, I can live my life between the stop and the target. For me, out here in Florida, That means that I'm living my life on the water with my family and friends. I call them beach trades, pool trades, walk the dog trade, play with my kids, whatever it is you like to do. I want to give you back that time. So, folks, some traders ask, well, how long do you trade during the day? This is important. Most of my trades are actually taken between 8 to 10:30 in the morning. And then after that, and that's Central Time, folks, then after that, it's about managing. That way, the rest of the day is yours. I'm going to show you how it is to be comfortable. The Tr3ndy definition of supply and demand. This is where I think, this is where it gets really interesting. And I just want you guys to bear with me for a few minutes. Listen to what I'm trying to tell you. It's about price, not volume. Balance versus imbalance. That's right. I'm sure you've been told many things through all the years of your trading. I'm not trying to throw those out the window, folks, but what I'm trying to tell you is A plus B equals volume, not volume equals A plus B. A plus B is you and me. We are the buyers and the sellers. What I'm going to do is help you identify these zones on a chart, show you how we execute them with a calm, consistent approach. Let me show you really quick. I'm going to take you to a whiteboard. You'll notice here in a few minutes, I'm going to show you supply and demand zones on a real chart, but I want to get you ready. A demand zone is green and a supply zone is red. How many times have you taken a trade to immediately see it break down? What most people don't understand is all these things that are out there like news, they're there to create fear in the market and then push price down into bigger pockets, those institutions, those funds, those hedge funds. And what happens is, as soon as we jump into demand here, you take a loss. And then remember that other struggle we talked about on how price then moves up? What this does, it creates this sense of almost like revenge trading, where it's like, you knew it was going to work. Why didn't you stick to your plan? It's all orchestrated perfectly. The news comes in, the fear comes in, and again, they're just waiting down there. And then soon as you feel the courage to take the trade again, what you don't understand is you just bought in with a bunch of retail traders, right? And then we consolidate. And then you're thinking to yourself, I cannot believe that I just took a second trade and here I am at a loss again. Lo and behold, price then pushes up to the upside. This is where complete FOMO happens. This happens in supply. What do you think happens into supply zones? This is where greed happens. Matter of fact, this is where the good news comes in. This is where the analysts are upgrading things and they're basically saying nothing else can go wrong. You start to see news in a whole different approach. What I want to do for you folks is I want to show you how to identify these zones. I want to show you how we approach trading them. I want to show you what it feels like to be patient and to wait for price to come into a zone and then execute that trade. And what do you think we're doing about right here? We're going to be trimming our trades to the old you. I'm going to show you how to hold this trade. Remember, I was talking about range by just using a few Fibonacci tricks. I'm also going to show you my cloud and how we stay in a trade as long as the price is staying above. And then when complete FOMO hits the old you, we're going to be selling there. And it is going to feel victorious. And I know that there are people in the house tonight that trade this methodology with me. And I want to hear from you. Am I not telling you what we see on a day-to-day basis? This is what I want to show you. There is so much power behind supply and demand. And the cool thing is, it's valid in all market conditions. The proof of concept is there, guys. When charting back since the inception of the market, it's absolutely insane. So that's a great question. Can you show what imbalance looks like? Yes, I can. So let me go right back to the whiteboard here. So an imbalance, and again, that is I love that question. Imbalances in the market, what happens is that institutions are buying at copious amounts, large amounts. And I don't know how many traders are out there who try to put these kind of big amounts into the market. Even if you're trying to buy like 100 lot of calls or puts, sometimes you don't get filled very quickly. Price will then jet up. Well, institutions, they're not sitting here. They're like, hey, I need you to go buy $2 million worth of Apple. Has anybody try to put $2 million into the market and see what happens? Basically, this will shoot up. It'll only get a partial fill, okay? And then it creates this huge imbalance. And what happens is once we get some kind of blow off top here, let's just say it looks like this, all right? We get that little first sign that the market might be coming back. It comes back to the imbalance of the market because what happened is the institution down here did not get filled all the way. So the idea is that the imbalance is going to be filled. That's why we are patient and we are identifying these very high probability turns in the market to set you up to trade alongside with the institutions. That's where I want to be. So the Tr3ndy definition continued. Looking at this chart, you can see that J&J back in the 1990s, the demand zones have been working this long. That's the amazing thing about supply and demand. I always get that question. How long are these valid for? They're valid for so long, since the inception. Can we use old zones? Yes. What are those green arrows? That's a great question as well. These green arrows are buy signals that come with the indicator itself. So this is part of my indicators. This is an EMA cloud. It's not like all EMA clouds. It actually finds supply and demand zones and allows us to see that by looking at either red arrows or green arrows. You can also see here from back in the 1990s that when we identify zones, okay, and demand zones, you can see that when price comes back in here, it's very powerful. The other thing is we love using this cloud to stay in a trade as long as price is staying above it. Why get out of it? And you can see this work from 1990s all the way into the current year. So how do you think like an institution? I think this is a great question, right? And have you ever really thought about it? What separates the retail trader versus the institutional trader? Seriously, what do you guys think it is? What is the big difference, right? What is the big difference between what a retail trader is doing versus an institution? The big difference is that institutions are very disciplined. Do you think institutions are FOMOing into trades? No. They know exactly where they want to buy. They know exactly how to build liquidity from retail traders. They know exactly where they want to sell in advance. Then the news comes out, and then they stay very patient. I want to teach you how to think like that. Listen, folks, all my charts are going to look like this. You're going to have red boxes. You're going to have green boxes. And right here, you can see the imbalance in the market. You're going to have some green arrows, some red arrows, depending on what direction we're trading. But your charts look like this, supply and demand zones. Okay, pretty straightforward. The indicators just make it a lot easier for me. So part of my methodology, it really relies heavy on set and forget trades. So I always get this question, hey, John, my brother actually asked me this question. John, what would you be doing if you weren't teaching traders? Well, it'd be set and forget trades because I already understand where the zones are. And I'm very comfortable with taking a trade and understanding my risk, taking that trade and then living what I call my dream lifestyle. And that's what I'm trying to show you folks. I have a lot of time to trade. And my members would tell you, and I'm sure there's many here today, they will tell you that I spend a lot of time with them. But again, I have to have time with my family and I have to spend time on the beach. That's really, really important to me. So this is a really important story here, okay? What does Tr3ndy stand for again? So Tr3ndy stands for this. T stands for trend. R stands for range. 3 stands for 3 to 1. So basically, I want to put you in a trade where you are taking something, let's say for your risk is $1. I want you to be able to get back 3 in return. And I'm going to show you some of these indicators later that will help you understand that before you even take a trade. So many trading furus. If you don't know what furu is, and actually the other day we did a poll, and I was surprised at how many people didn't know what these were. So furu is the opposite of a guru. A guru is me. I put my time into the market. I've spent real money, and I do what I say. Furus are the opposite of that. They're basically teaching you how to do things, but have no credibility. And this was my experience. I wasn't always had my own business. So I was just like you. I spent a lot of time in the chair chasing PLs, right? How many times have I chased a PL just to find out that I don't have enough money in my account to take the trade that those traders were taking? But most of all, what I found out early on is that a lot of these traders were not actually putting their money where their mouth was. They were using paper trade accounts. But I was hungrier than that. What I really wanted was to understand a process. I wanted to be able to fish for myself. That was so frustrating, folks. Like, it didn't matter if I lost. Well, first of all, if I lost, there would never be an answer. It would be like, hey, like, why did we lose? Well, that's just what happens. You lose. Okay, but do you have a process? So when I would make money, it was even more confusing. They couldn't tell me why they made money. So I thought to myself, so wait a minute, you don't have a repeatable process? Like, this is crazy to me. So as I said, folks, I have spent countless amounts of money learning supply and demand, but also the school of hard knocks, just like anyone else. But I want to provide you guys a level of teaching that I pay the big bucks for. And I want to take out the complex part and make it that much simpler for you. So again, I'm going to show you simple, repeatable, and something that's methodical and sequential. So how do I achieve transparency? Well, I'm going to get to that right here. So my number one rule is transparency. I built a strong reputation on my alerts, folks. Matter of fact, I don't know anybody else that's doing this. I mean that. I don't know anybody else that's doing this. Here at Simpler, we are patched into my API behind Thinkorswim. And as soon as I click the button and execute a trade, it's showing you exactly what I'm doing. Now, why is this important? Well, think about it. There's no cherry picking. Everything you see I trade, everything I trade in my account, you're going to see. But to top it off, look how easy it is to understand. First, I'm not writing them. I'm not taking 2 minutes to write them down. I'm not trying to think. I'm just executing my plan. And you immediately, within milliseconds, to the room itself and to your application, you're going to see the name that I buy. You can see here Tesla. You can see the price. You can see the quantity. You can see whether it's a call or put. You can see when I'm trimming. And most of all, folks, you can see what the percent change is. Percent is really important to me. You have to understand this. It's about percent, right? Because I was always chasing PLs. I want you to understand it's about the process and what you get out of that trade. You also get the remaining quantity. This really, really clears things up. How many of you have been in a service where the guru is saying, let's say that you got in something for $1. How many of you are in a trade and you get out at 2 and you're like, yes, I made 100%. And then all of a sudden, this person's like trimming like infinity, right? How many of you done that? Seriously, you have to tell me you've been there and done that. And you're sitting there like, I just got out. I had no idea that this guy had like 200 contracts, right? Like who has this many contracts? So here we have the quantity, and it really, really makes it transparent. So you can understand how many that I have left so that you can see exactly what I'm thinking. So again, guys, as I said, my passion truly lies in teaching you guys a repeatable process, but also with transparency right there. So what is the main problem with traditional strategies? First of all, I want to be very clear. This is not like a slight on anybody's strategy that they're using. All right. I think that everybody's an amazing trader. I just strongly believe that everybody needs a little bit of supply and demand in their life. It is the edge. Think about this. If 95% of traders are failing and 95% of them are using the same indicators, what is your edge? If your indicator is free, then chances are your competition, folks, hedge funds, institutions, other traders, chances are they have the ingredients they need to squash you. Moving indicators versus supply and demand, this is the one for me that really should resonate with you. Supply and demand is always there. It's stationary. You're going to see that a little bit later as well. I have indicators that identify supply and demand trades on all time frames. They do not move. So basically, we have a zone, we wait for price to get there, and then we execute out of that zone. I don't need all these moving things to say, okay, now all these things are in place, now I can take the trade. Supply and demand zones, they just don't move, folks. That's the reality of it. And most of all, you just need too many variables and traditional strategies before you take a trade. And as I showed you before, that can go against you many, many times. Let me show you one more example, though, before we move on. So right here on the screen, folks, what I mean, and again, I understand that some traders are conservative, okay? I'm not taking away from that. But what I'm trying to do is line you up here with the bigger institutions. And what I'm trying to keep you from doing is waiting for all these variables. See, the market goes up, and then somebody over here says, wow, look at that volume. And then you go, yes, look at that volume. I think I'm going to get in. Then over here, unusual option activity comes out, or some kind of form of activity that says, look, all these things are happening. By that time, price is already here. I want you to learn how to identify these zones and get in here far in advance. And I want you to be trimming. There's nothing that feels better than that. So the power of knowing these entries and exits in advance, again, allows for set and forget trades, allows for OCO setups, allows for a Zen type mindset. I've already accepted the trade. Why do I have any fear? And I talk about this every single morning. It allows for you to have a true plan. It eliminates the FOMO, and you get to know your risk before you even take the trade. I can't tell you how many times, like through these growing pains, that I had no idea when I was with other services, not knowing how much I was risking. Truth of the matter is, what you put into a trade is what you're risking. It eliminates a lot of emotional distractions. Plan your trades and live your life, folks. So let's look at some actual trades. What time frames do I use, and do I need the indicators? So what time frames do I use? So I'll tell you my favorite time frames that I use are going to be the 4 hour, okay, the daily, the weekly, the monthly, the quarterly, the yearly, the 5 minute. I'm going to show you how easy it can be to switch through all those time frames and trade this methodology. And boy, do the indicators really help a lot too. And I'll show you that again in a few minutes. But let's get into a couple of these trades, okay? So do you need the indicators? Absolutely not. You don't need the indicators, folks. Listen to me. I'm going to teach you how to find these manually. That is so important. I'm kind of like my grandpa on this. Any of you guys have like a grandpa or grandma that like insists that you learn the old-fashioned way? That's me. Like, seriously. You guys, like, you have to learn the traditional way before, you just jump in, right? Well, in this trade here in Netflix, notice, yes, we have the alerts. They're coming straight from the API. It tells you exactly how much I'm paying for it. It tells you how many. It tells you when I'm trimming, 23%. I take some off at 11, 50%, 156%. That's all great, okay? But what I want you to notice about this is I took the trade because price moved over my cloud that we talked about a few minutes ago, okay? I had buy signals. I knew exactly where my supply zone was. There's a purple level here. That is a supply zone. But most importantly out of this trade, it's not about the 156%, folks. You guys know I have 2,000% trades. I have 4,000% trades. This is about understanding that we did not here in the simpler room buy into FOMO. We literally traded this up into target. We sold, and somebody most likely got FOMO here and then got into a trade just to see it drop from 346 all the way down into about 337. I'm going to help you and keep you from making those mistakes. So J&J, how much money do I need to trade with you? Well, okay, here's a great example right here. So J&J, this trade anywhere from 1,200% to 4,400% is what I made. Now, please understand that I traded this in 3 different ways. I had spreads, I had higher delta calls, and this example right here is showing you an out of the money call. All right. But the power of supply and demand is really, really cool because you understand that when we come out of demand, if you're looking for supply and it's nowhere near, then that gives us much more of that volatility that we're looking for to push us up there. This trade right here cost me a total of $232. This is straight from my broker. Okay. $232. And I ended up cashing out at around $2,500. So to answer your question, I always tell people you just need a few $100s. Most of my trades are anywhere from $50 to all the way to $1,000. The majority of them fall, I would say, between $50 and $500. Okay. So again, the biggest thing I would say though is contact your broker and ask about a cash account. All right. So a cash account is what I would look into. Matter of fact, when I first started, I thought I needed $25,000 to be able to get in and out. But the truth of the matter is you just need a cash account. Okay. All right, so here's a Tesla trade. Now this one, this has been really, really fun, guys. And I think you would agree with me. So if you're in the room with us, give us a shout out if you've had a good time at Tesla, because this trade just keeps paying over and over and over. And the thing is that it would be impossible for me to sit here and tell you how many times we got in and out. But what I can show you is that this trade, after about 400 or 500%, I decided to go ahead and roll. All right. And the reason why I took the trade is because of this indicator right here called the PMZ. This is one of our most popular indicators. And remember when I told you about the 3-to-1? Well, this really sets you up to help you understand what that looks like. Matter of fact, every single morning it's going to pop up before the market opens. It's going to tell you what your risk is. You're going to have automated targets, and you're going to be able to take that trade with confidence, knowing exactly how much you can lose and where your target is. In almost every case, these are much more than a 3-to-1 return. I took the trade when it broke above the PMZ. I sold it up here almost to the top again. And what's really cool about this trade, one more time, guys, it's not about the 94%. It's about the fact that we sold almost right at the top and then it completely dropped right afterwards. That is what I'm here to do, hoping to show you how to get that edge in trading. So your key takeaways, guys, if I haven't shown you enough, we're lining up with the big money. All right. Supply and demand levels are where the market turns happen. We're looking for these high explosive moves. I'm going to show you how to do that in just a few simple steps. Predictable in advance. That's right. We could time our markets. We could look for confirmation at levels. That's all we need. Trade at your own risk tolerance. You have some good winning trades, but how do you deal with your losses? Man, I love that. Because listen, if you're in the room with me, then you know that I am as transparent as can be, and losing is a part of trading. But what I want to do is make you understand like what the process looks like, right? And you know why you lose. So remember that fire that got me started with Furus is they could never give me an answer. You know, they get offended when they lose. I'm going to tell you, we lose and we win, but we win a lot more than we lose. But the big thing is for you to understand, I want to give you a little bit of the secret sauce. And it's not a secret, but I talk about this every morning, don't I? Any members in here, you know that I talk about this. If you've ever heard me trade live, this is where the passion is. You have to be comfortable with what you trade. It all comes down to your allocation. I'm going to show you that. And what's cool about this is we have a plan, we have a zone, and it already lets you know what you could lose before you take a trade. That's the important part about this. Yes, Chuck. 100%, Chuck. This is all about supply and demand trading. However, it's not exactly. What I've done is taken the supply and demand, I've created some of my own levels, and I made it a lot simpler to find these instrumental points. And I've also come up with some really cool stuff like the pre-market zone and obviously the bands. So supply and demand is definitely the most important part about this. So what about the trendy trading room here at Simpler, right? I'm sure you guys are wondering, what is that all about? Well, listen, I have been doing this a long time. And for anybody that's been out there with me for the last 7 years, you have to admit that this annual package is absolutely probably, this comes with my entire indicator bundle. You already know that I teach you every single morning, Monday through Friday. We're giving you amazing trades in the room. You get the plan session, you get the supply and demand strategy class that we'll be doing. I'll be spending hours with you to make sure that you're comfortable and what we're getting ourselves into, which is the most awesome process out there. You get all of this for $19.97. And if you didn't know, it's not a secret. I've been selling my indicators for 7 years, folks. And that price tag on that is $3,000 alone. So you can look at this and understand the value very, very quickly. So, Ivan, I love that question. If I become a member, would I be able to learn your system and eventually pilot it on my own without needing to be a member forever? That is absolutely what I am here to do. All right. If I didn't make it clear, I'm going to teach you how to manually do this, and I'm going to show you how these indicators can change everything and make it faster for you. But my job and really what like pumps me up, folks, it's about you. It's about your success. Listen, folks, this I'm going to share this with you. When people ask like, how well are you doing, John? My whole thing, I want to know how my members are doing. How are you doing? Like ask the members. So when you come into the room, I want you to ask what they're doing. How are they doing? Okay? And we probably have members in here tonight. And I would ask them. Ask them to step up and tell you whatever it is that they are experiencing. But yes, I'm going to teach you how to fish. So you're already a member at Simpler. That's awesome. If you are, we already have a special there for you as well. Notice the annual price. These are the same things we just talked about. And again, I really do think this is this is an introductory price into this entire webinar. So understand it's not always going to be there, please. Notice that you also have a quarterly there, and we'll talk about that here in a second. So let me talk about my indicators. All right, you've already seen the price, folks. It's absolutely a steal. And I mean that. Matter of fact, I want to share a personal story with you really quick. So years and years ago, I was sitting in my room after I learned about supply and demand, and I came up with this process. It wasn't like overnight. This took years. And my friend told me, and actually he came from Simpler. He's the one that introduced me to John and Simpler Trading about 7.5, 8 years ago. And what's incredible about this story is that he said, you know, one day, John, someone's going to see how powerful this is, and they are going to want to take this. Are you willing to sell these indicators? And I used to think to myself, no, you know, but I also thought to myself, like, that would be really cool to like get people pumped up, right? And to show them something really neat like this. Well, here we are. And again, we have an edge scanner, and I want to point these out to you really quick, and I'm going to show you what these look like. So the edge indicator, everybody understand, it's going to look like lines on the chart, but it's identifying supply and demand zones on multiple time frames. Then we have a scanner. That's super cool as well. All I have to do is come in the morning, and it tells me off a list of my watch list exactly where supply and demand is and what names are bouncing up against those supply and demand zones. Then over here, we have the pre-market zones, okay? The PMZ, one of our favorite indicators, part of that bundle as well. Also, you have a PMZ scanner. Makes it just that much easier to understand where they are. Your bands indicator, we'll go over that and a line in the sand. How do zones compare with voodoo lines? So zones are basically supply. Again, zones are supply and demand. They're big pivotal areas. What we're doing is looking on a higher time frames all the way down into smaller time frames, and we are identifying those zones. I do not understand the voodoo line from a code perspective, but what I think I understand is it is not based on supply and demand. Yeah, they're completely different. Okay. Now here's an example of a trendy edge. Okay. Now the edges look like lines. I understand that. But on the indicator itself, you can actually turn it into a zone and put the cloud up here. So it looks like something like this. And the idea is they're automatically on your chart. They're color coded to let you know what time frame they're on, because not everybody wants to trade off a monthly zone. Some people want to trade intraday, and we have zones for those as well. So basically, I teach you the process of how to get ready to take that trade. And then all you do is look for the lines on the chart. Tr3ndy bands. So EMAs, exponential moving averages. Again, I talked a little bit about this earlier. This is a great demonstration of what they look like on your chart. And they also come with the red and green signals. These signals are basically identifying supply and demand within those candle structures. It's really neat because if you think about it, folks, what happens is when price moves up this way, let's say that it starts to move back down. All my traders have to do is look down and to the left for a green arrow, and this is identifying a demand zone. So not only do you have the edges, but you also have these arrows identifying those zones for you. So once again, we teach how to stay in the trade above the cloud and how to go short below it. PMZ, like I said, this is one of our favorite indicators. How many of you guys are members out there that love the PMZ? And I swear, like, this is blown up, and people absolutely love this thing. And the reason why I believe it resonates with a lot of traders, and this is crazy to me, is because a lot of traders would say, well, it's because the market has changed. Here's the thing, folks, is that the market hasn't changed. Okay, it has not changed. Matter of fact, things are pretty much the same. Supply and demand has always been there. It's going to be one of those things when I teach you, you're going to look back and be like, holy crap, nothing's changed. I just haven't been identifying these zones. Well, the PMZ, if you notice in the morning, it's going to tell you what your risk is. And it pops up on your monitor up here. And it will tell you. And what happens is we just go long above, just like the demonstration showing. You go long above, stops below, and then you look to go long. If it breaks down below, you go short. Do I use the squeeze histogram to time trades or just use supply and demand indicators? Doug, so I actually use the TTM squeeze as well. Okay. Now I use it a little bit different. I use it like I only use the histogram portion of it. And I teach you guys how to use the histogram portion. So we look at the colors when we come into the zones, and there's this like synergy that you can use off of both of them that really, really help on the timing of your entries and exits. It's just a tool that I do help to use, Doug. John, are the candlestick patterns you need to learn? Are there? Yes. So only two. Reeve. So you asked, there's only two that you need to learn. Two. Yeah, I don't need you learning like 100 different different structures. I'm going to teach you how to do just two. And these things can change your trading life. I promise you that. All right. So yes, just two. So what sources do you monitor to determine what is influence and price action with the equity targeted? So what I monitor every single morning, we come in 30 minutes before the market open. I give a very clear picture of what our ES is doing. So this is what I tell everybody. I let the ES futures basically point me in the direction that I want to be with my equity as in my portfolio. Okay. So if I'm looking for ES futures to come into a demand zone, then once it gets to demand zone, then I'm net long in my portfolio. And then I basically just go to some of my favorite names. And those favorite names consist of about 50 names. And so I'm always monitoring those. And I do NASDAQ and ES futures. Yeah, can you see the actual trading room? Yes, you can. I will definitely get you there. All right. And let's go back here just really quick. I didn't hit a whole lot on the quarterly package, but I wanted to show you guys really quick. So for $597, total value of about $1,094. This is also absolutely great. If you want to come in, for this quarterly package and see the proof of concept, I feel very confident you're going to see it very quickly. And you're going to want to see, the rest of that. I feel very confident that you'll want to spend every morning with us. And the strategy that we use is absolutely amazing. Oh yeah, this is so some of our traders. I would say, well, future traders. Do we have any future traders that are in the webinar tonight that are members? Maybe you can help answer that. But yes, we are heavy into futures. So every single morning, I'm hooking you up, giving you these plans. I'm teaching you how to find it. Listen, it's not a secret sauce. I'm going to show you how to do it. You're going to love the way that I coach. I'm your lifeguard, basically, right? You guys know I live on the water here in Florida. I'm your lifeguard. So I'm going to set you up every single morning with an awesome coaching session. I'm going to tell you where price is going and how we react to it. It's going to be different than what you're used to experiencing, right? We're not high insight traders here. I'm going to tell you before price gets there. Okay. A couple things I want to point out is that Monday through Thursday, I'm live with you guys from 8 to 9:30. That's what the schedule says. I would say that 9 times out of 10, I'm in there till at least 10:30. All right. And then I come back in at 12:30. I'll give an update if needed. So sometimes the big thing going back is that we're trading from, on open to about 10:30. And then after that, we're just managing. And basically that means at 12:30 and 2:30, I'm going to update you. Sometimes we like to do the close. And yeah, so that's kind of how that rolls. Friday is a little bit different. This is where, for me personally, I want to take off. I want to get away from the screens. Most of the action's done right in the first 2 hours. And you're going to see my lifestyle. I post it out there. Like, I don't kid around. What you see is what you get. I'm going to show you how to trade, but I'm also going to live my lifestyle. And I'm just like super pumped to show you how to do that for yourself and your family. If we come over here, let's see, is this applicable to future? So yeah, I answered that. When a trade goes wrong, what typically has gone wrong based on your system? That's a great question. So what typically goes wrong is we either get busted out of a zone. So let me show you on a chart just really quick. So Control 2, go W. So let's just say right here that we have planned for the trade. Okay. Price comes down into the demand zone. I'm going to show you a couple tools right in the room and teach you how to precisely look for an entry using your TTM squeeze. Okay. And that would be the conservative approach. But if for some reason this flushes out and you have your stop underneath here, this would be the reason most likely we get stopped out. Okay. So it's very sequential and methodical. It's pretty much going to be the same reason every time. So thank you for asking that question. What is typical length of trade? So currently right now, I have trades on that are 200 plus days, but a lot of our trades are taken within anywhere from, I would say 1 to 5 days. But I also like to have on swings. Matter of fact, I've had quite a few swings on this year, folks. I did 1,000% in Tesla. I just kept adding into the trade at the levels that were predefined, which were demand levels. And then we took gold early on before anybody even got bullish. We did really well in that. And if you guys have been around long enough here at Simpler, then you would know we had an amazing trade in Meta this year where our target was hit as well. So I trade everything. I mean, that really is a great question. But also, I don't think that anybody asked this, but I get this a lot. How many trades do you guys take? So basically, you can pretty much bet in most conditions, I'm probably taking anywhere between 2 and 4 trades a day. Okay. So when we talk about high win percentage, those intraday trades are turning. Okay. And so I'm teaching people how to hit those base hits. RBIs win the game. You guys have heard it before. All right. So the dream of like the big percent gainers, do we have some? Heck yeah. I just had 2,200% in NVIDIA, 2,200% and 500% in NVIDIA. So we do get those, but I'm here to teach you something that is repeatable and consistent. I want to start you guys off right. Okay. So just make sure you understand that. John, do you buy calls and puts, or do you other option strategies? So yeah, I like doing credit spreads. I like doing debit spreads a lot. So that 500% gainer on NVIDIA was a debit spread, and it's one of my special things that I like to do into earnings, and it'll really open up your eyes. It's really neat. Basically, what we're doing is we're identifying zones, and then we create a structured debit spread around those. And as long as we're okay with our risk, I'm okay going into a binary event. Matter of fact, guys, I love showing how to trade futures on FOMC days and things like that. It'll blow your mind because then you'll look at news a lot different. News is a catalyst that pushes price into supply and demand. Fred, did that answer your question? I hope that really helped you there. All right, guys, for anybody also that's interested here, if you're using PayPal, all right, it's pretty cool. They do a 0 interest for 6 months. I kind of wish I would have known that a long time ago when I was going through all the little like different services. Again, I just really want to reiterate like those prices we talked about earlier, those are introductory. And again, they're super inexpensive compared to what I typically charge. But you know, it's part of this introduction. And what's really neat about this, I need you to understand this. You are not just joining a great methodology, but you're joining a team of elite traders. Like I have built some of, and I am proud beyond, like I'm just so proud. I am here today because of the success of other traders. It really comes down to that. If it wasn't for them and their support and for this lifestyle that I'm so humbled to be a part of, it's because I feel super confident in what I teach them. And I can't wait till you guys join us. And I want you to be able to live that lifestyle. Okay. So these pictures, if any of you guys want to know, this is me last December. Melissa, I was there with you as well. You'll find Melissa in our trading room, one of our master traders there as well. We went to New York and we got to hang out with some of our simpler members here and some of our Tr3ndy trading members as well. That was back in the past, again in December. That's me and my daughter. We're hanging out on the water. This is actually our backyard right here. And that's me deep sea fishing. I love fishing. And this is the office right here, right? So we're doing a lot of renovations. But if I'm not on the Peloton watching the charts, then I'm on the mic just like this. And this is my grandson. He's 2 now. But I put him in the chair when he was like probably 8 months old. The dude's tall. He's super tall. And I always put headphones on him and let him listen to things. So, yeah. Yeah, how do I set my stops? That's a great one, Dave. So stops are really important. So for me, I'll give you a great example. So SPX trades, I tend to trade what I'm willing to lose. Okay, that's really important to understand. All right, SPX. So when any trader goes into a trade, they need to understand that like nothing is guaranteed, right? How many of you guys listen to Mark Douglas? Like if you don't listen to Mark Douglas, put him on there, right? He's going to be like, I always tell people, like, you should listen to what I'm telling you, but also go over to Mark Douglas and just listen to this guy over and over and over on repeat, right? Very important. I have the right mindset. So I place my stops where I'm comfortable with losing what I have already predetermined as the number that I'm willing to lose before I take a trade. And as you guys have noticed, every trade that I show you, you're able to see that. So you guys have asked, like, what does the Tr3ndy trading room look like, right? You guys want to see what that looks like? So over here, all right, obviously we don't have many people in here right now because hopefully they're in here. But this is what it looks like. So over here, this is going to be the actual chart right? You're going to be watching the chart here. You have your chat room down here, okay? And up here, you have all your trades. And it's really neat. You can scroll through these. Now, I get this question sometimes, folks. And the question is, okay, is how are you doing on your trades? You have to understand that those trades are coming straight out of my API. There is no difference. It is exactly what I'm trading. If you want to see what my account looks like, I want you to go through those trades and I want you to check them out. Okay. Enrique, so for the swing trades, I'd mentioned earlier the average duration. For my swing trades, like when we say swing, I feel like there's a lot of, everyone's different. So again, I have trades this year that have been anywhere from 80 to 100 to 200 to 300 days. So for example, if we look at the market right now, you would see that the market itself is it hit supply zone. And so we let everybody know that on Sunday, folks, Sunday, we let everybody know, hey, we're moving into a supply zone, pull up those stops, be cautious. And then we coached our way down in the last 2 days into that demand zone. So when we get to higher time frame demand zones, that's where I start loading up on the long-term positions for a layered approach into long calls, equity and stuff like that. Okay. But understand the strategy can work on anything that you're trading. Again, Forex, crypto, options, spreads, all of that good stuff to include futures. So if you want, yeah. So when do you prove your 70% win rate? I feel like I prove that almost every single day. So once again, if you can come in here and take a look at the trades themselves, this is a look into my account. Okay. So every trade that you're seeing in here is straight from my account. All right. And what you could do is you can go to the archives and you can also look in here and you can go ahead and take a look at how our performance is here in the room. How much time of the day am I in the room? I'm in there a lot. I mean, how much time would you guys say? I mean, we went over the hours a little bit earlier, quite a bit. 2 hours in the morning, then I come back twice more. And a lot of times I'm sitting right here in the office trading with the folks. So yeah, my passion is with our traders. Average percent of our wins, I would say anywhere from 30% up to the average would not be 2,000 and 4,000%. But another thing, again, if you go through all the alerts, you can see those averages. But I would say at least 30 to 100%. Yep. Is taking the alerts part of the learning process? I love that. So this is what I've been saying for many, many years. My alerts are a proof of concept. What that means is that I put my money where my mouth is. You're also going to see exactly what I take. I showed you that earlier, quantity and the price. So yeah. They sure can, Jack. So Jack asked if my system and zone scanners can benefit in the gold futures, oil futures, and ES. 100%. 1000%. Like, honestly, like we start off every single morning with the futures. All right. And I also teach you how to trade the SPY and the SPX off of the ES futures blueprint that we go over every single morning. Yeah. So what's the difference between edges and line in the sand? So the edges are, once again, predefined demand and supply zones that are automated. The line in the sand is a pivotal point that happens within the maintenance period of the futures. So we actually created the line in the sand based off of futures trading, but then we found that it was so instrumental in the idea of trading from the PMZ. So again, you can use it on all these charts, but we actually created it from the maintenance period of the futures. I hope that answers your question. Yeah, so the zones themselves are way different than resistance and support. So resistance and support levels, you basically like draw a line where you see a bunch of candles. Zones give you more of a identification of where price can turn within that zone. And then we use a couple more tools to help identify more precision on that entry or exit. So that was a good question. All right, folks. So once again, I really appreciate you coming here. This has been a huge night for me, and just your support really means so much to me. Take the time to reach out to me if you have any more questions. Other than that, it's been an absolute pleasure, and I can't wait to trade with you here shortly.